My heart is catching fire. I just feel so fine with this fire, this fire, this
Hey guys, welcome. Alright guys, let's get started. It's your boy Tony and we are live once again. Super excited. It'll be really nice to know where you are all joining from. I'm not going to waste a lot of time. Today is an incredible stream we have. We've had a lot going on in terms of geopolitics. We're looking at lots of things unfolding right before our eyes. If you're joining in live or watching this back later on, you're welcome. Right, today's session is not about hype. Right, we're not hyping anything, we're not predicting anything. This is not a signal stream, right? We might have a few trades here and there. However, it's very important. Let's see what's happening here. Can you all see me? Can you all hear me? I'll need to keep refreshing this. Okay, there we go, guys. Wonderful. We are live and testing out everything. Perfect. All right. Yes, guys. So it's pretty much about understanding what's happening in the market right now. Okay. After a very heavy set of fundamental releases and how to respond to that environment as a trader. Simple as that. Don't forget we have a live chat and you are welcome to ask all the questions you have. All right. I'm using pocket options. You could use the promo code TSTREAM to get 100% bonus on your first deposit. The link and all the details are in the description below. Right, guys, so what has been happening this week? We'll start off with the economic calendar. Let us check out what has been happening between, let us see. Right, between 26th up until today, 30th, right? We've had quite a lot happening. We've had the Bank of Canada decisions, right? We had some oil data. We had the federal funds rate, FOMC, which was pretty much like the climax of this week. And we also had the FOMC statement and the FOMC press conference, right? That's a lot of information for the market to digest. And when markets usually digest this information, they don't move cleanly at first. All right. And as we'll be seeing with different currencies, we had gold, we had silver, we had a lot of things going on. This is exactly the environment where traders either level up or they actually blow their accounts. Now, we are trying not to speed up the process of blowing up accounts, right? Many of you have been DMing me, telling me about your stories, and I really feel sorry for you if you're just jumping on the bandwagon, all right? I want to remind you that my Telegram channel has a free signal resource for you all right? We have a lot of articles that I keep writing in there. It's pretty much like a motivation community. We're putting a lot of emphasis on the process, all right? We also have a private group later on for those of you that are more serious, right? We have updated that a lot, and I pretty much run you through trade by trade, signal by signal. So you might want to check that out. It's something I highly recommend. And for the advanced group, you know what to do. All right, guys. So the stream that I'm going to take today is pretty much trying to slow everything, right? I'm trying to explain everything in plain language, in a language you and I can understand. We'll probably have a few trades. I'll show you how to read the environment. It's very important to read intuitively to understand all the corners of the financial market. As you can see, I started off with the crypto bubbles. This is a very open, a nice resource to check out what's happening on the crypto side. Understand that Bitcoin is at 82 now as I speak. Today is the 30th of January. And looking at the alt index, we have 43, all right? So this tells us a lot of what's happening in the market. We have a lot of money from recent developments. We had the 8% drop on gold. We had a lot of commodities spiking up and pretty much recovering all the gains. Now, if you've been over leveraging here, I feel just sorry for you, but I also invite you to learn the right way, okay? All right, guys, so let's start with the most important concept of the day. Markets do not decide direction at FOMC. This is very important, all right? If you're watching right now, kindly go to the chart, the live chart. We have a live chart, and you could always tell me where you're from, where are you joining in from. It's very important to understand the demographic here, understand which countries you're coming from, and tell us your experience this week. Okay, now I want to draw your attention to the Federal Reserve, right? This website is an open source as well, and it is a little different from the US Bureau of Labor Statistics, because here we're focusing on the Fed, right? We have the Federal Open Market Committee 2026. You could go check out the statement. You could download the PDF and try to understand really what's happening, all right? Now, understand that before events like the FOMC, traders usually position based on expectations. After the event, traders react emotionally, they take profits, some cut losses, and a lot of repositioning starts to happen. This is the aftermath. Now, that process creates volatility, but not necessarily direction. Now, as you can see, gold has been climbing, right? We're having that pullback, and I was expecting that because it's January. We usually have that towards the end of the month. Now, this could be a liquidity grab on the higher time frame because we've never reached such all-time highs, and it could be some kind of statement. Now, without speculating, I want to also draw your attention to what actually happens after FOMC. You're seeing disagreement. Some traders think the Fed was dovish, and we could go into depth, all right? As you come to my community, I'll teach you how to break down all this, how to really understand before you press the buy or the sell. So some think it was neutral, some think future cuts are already priced in. Now, we saw that on a lot of publications on Twitter. Remember, I taught you how to run through Twitter, who to follow. You could go check out some of the people that you need to follow and try to observe and understand the sentiment over there. We saw Trump recklessly calling out Powell, telling him that he needs a replacement, and he pretty much needs somebody who can reduce the rates. Now, a lot of speculations around that, and this disagreement shows up as sharp candles that we are actually seeing right now. You open your gold chart, we're seeing a sharp on the weekly, on the daily, on the 30-minute. You know, we don't usually have these moves, and these are very good times to be in. If you are an informed trader, you know exactly what you're doing. So this is why I don't rush trades, right? We only have 3 signals per session, and we stick to the rules. If you check out my Telegram, you'll be able to see some of the trades. For example, if I send out a USD, Swiss franc, OTC 3-minute sell, we had confirmation, the RSI, the MACD, the ROM, the parabolic SAR. All you got to do is go and manage your risk on pocket options. Remember, we have that calculator. For those of you that are pretty bad, you could just say 1% of your account. I advise 1%, and it automatically calculates that for you. Anyhow, so without rushing any trades, settling means price starts respecting levels again. So you have your levels, go to bar chart, get your real levels, all right? Get your real levels. We have, let's see, performance leaders, highs and lows. Yeah, you choose one instrument, say we have USD card, and you want to align all your highs and lows with that, all right? And you could look for that, and once you have aligned that, you have your highs and lows. This is very important, okay? So when that happens, you can play around with the tops and the bottoms depending on the range or on the instrument, right? Now, it means reactions hold instead of snapping back instantly. If price cannot hold direction, right, after the news, like we had gold, right, direction is up. This direction is up, right? We have an uptrend. This is very evident. If you just put in any indicator here, you could instantly understand that we have, let us see what's happening here. If you put in a moving average, we could see the RSI down, we could see the, put in the inputs. Well, you could play around with this and have it on the higher time frame to actually see, yeah, we are trying to break down. Now, if price really can't hold direction after news, that tells me that the market itself is unsure. And when the market is unsure, trading aggressively is a mistake. So I highly advise no one to trade aggressively during these times, right? Especially with these ugly candles, right? And depending on the brokerage that you're using, I in this case use pocket options that I trust and I evidently have historical execution speed. I've seen this, and you need to be very careful when trading some of these aggressive markets. Now, let's walk through the fundamentals we had slowly and clearly, right? Let's start with the Canadian dollar. It was a Wednesday. We had the Bank of Canada monetary policy. We have the Bank of Canada rate statement, overnight rate. You go to the website, monetary policy report, and you could read through this, right? What were the highlights? Now, this was the overnight rate was at 2.25%. Now, if you just check Forex Factory or any open source, you just get the numbers. And if you'd like to dive deeper, you need to read this. Understand that, for example, turning to inflation, it is average 2.1 last year, right? And has now been within the 1 to 3% band for 2 years. We focus on recent movement, CPI inflation. So we've gone through all that. Understanding that is key, not just his numbers. So I'm pretty much explaining to you what goes on in my mind when I'm looking at these numbers. Now, that was expected. If you look, we had that expected 2.25, it remained 2.25. Now, if they sound confident, right, then it's depending on how they speak, right? So what we know is that what actually matters is how the central bank talks about the economy. Now, from the speeches and from the sounds, cautiousness, the markets start thinking about slower growth or call it future cuts. If they sound confident, CAD tends to hold or strengthen. Now you can open any Canadian dollar chart here. We have the USD card. Check out the higher time frame. Yeah, it's a little bit choppy. Australian dollar, CAD, same thing, choppy. Okay, now the press conference is critical here. We have the press conference and you could read that because hesitation shows up in their answers, right? Not in prepared statements. The way they speak and the way you dissect or break down their press conference release are two different things. I want to highlight that. They're two different things. The way they speak and literally the prepared statement are different things. So you need to be able to break that down as well. And this is what I do behind the scenes. The more you practice, the more you understand. Okay, guys, now moving on to oil. I'm just running through this because it is a FOMC stream today. So when you look at crude oil, inventories came out much lower than expected. If we check out the Brent chart, we had. Okay, what's happening here? We have crude oil. Let's check out crude oil. Futures. Okay, Brent. Let's see what's with Brent. Okay, there we have it. Yeah, we actually hit 70 right there. Now, on paper, that's bullish for oil, but markets don't trade numbers in isolation. They simply ask why inventories fail. Now, we know what's happening geopolitically with Russia and whatever is going on with the energy reforms, Venezuela and all that. If inventories fall because demand is strong, that supports growth. Now, if they fall because of supply issues or geopolitical tensions, that creates inflation pressure and uncertainty, right? Now, that distinction matters for indices, currencies, and gold. That's why we see that correlation. Now, if you break that down and look at it from a sentimental perspective, take note of all the websites that I'm using, you'll be able to understand that commodities like gold and silver are actually correlating around this time. We will have the fall between end of quarter one all the way up until end of quarter two, and we'll be pretty much back. This is historically how some of these assets move. Now, if you've been through a couple of cycles, you know exactly how this works, because one thing is said out there on the news, on Fox News and all these news media platforms, but in reality we have something different. So don't get FOMO'd into any reckless decisions while you're investing. Once again, I want to remind you all that this is not financial advice. I'm just streaming, and you need to understand that any risk that you take you're fully responsible for that. So check out the disclaimer. It's very important to note that. Right, now, the Fed is not just settling rates. The Fed came out, what did it say? We had the rate staying at 3.75%. 3.75%. Powell had his speech. He breaks it down, decisions regarding monetary policy implementation. We see that effective January 29, 26, the Fed directs the desk to undertake open market operations as necessary to maintain federal funds rate in a target range of 3.5 to 3.75%. Conduct standing overnight repurchase agreement operations at a rate of 3.7. So this alone, and the conclusion and related action, the Board of Governors of the Fed system voted unanimously to approve the establishment of the primary credit rate at the existing level of 3.75%. All right, guys, now to simplify all that, if you're breaking that down, the post-conference is where psychology shows up, right? Markets react not to just what he said, but to how it is said. Consistency calms markets, uncertainty fuels volatility. So this is why post-FOMC trading is very difficult, right? If you're a swing trader, you're long-term trading, and you're just trying to understand what's going on, why are these moves happening, all right? So many traders are just buying, selling, scalping, but it becomes actually fun if you understand the mechanics of what it actually is pushing certain pairs, certain baskets up and down. Now, this is where I want everyone to really pay attention. Most traders don't lose because of their strategy, all right? They don't have a bad strategy. Statistically, many of your strategies are at 75%. We all know that. So if you're live, you can comment and tell me why you think traders actually lose, because many people are losing. We got some people watching. You might want to share, just jump in the comments and be proactive. Right. So most traders, as I've said, the strategies and bad, they lose because volatility triggers emotional decision making. So after FOMC, you get the emotions and you get the bad risk management and so forth. So price is very fast. This creates urgency, and urgency kills discipline. As you can see, I'm not trading at the moment. I got my holding my horses and waiting for that sweet spot. We're looking at the time right now. We have New York is about 8:42. This is where you want to start positioning. London, they're coming out of lunch. So we'll wait for that golden time. At 2 London, we'll have 9 o'clock New York, and wherever you are, you might want to get into some positions. Okay guys, now, so in volatile moments, what actually happens psychologically? I want to break this down. Why do you seem to rush into certain trades? It's because your brain shifts from logic to reaction, right? Remember, you're dealing with money. Not many people know how to deal with money loss, right? This is something you build over time. It takes time to build, to learn, to reflect, and you want to get involved. You want to recover your loss quickly. You want to press after a win. This is why you end up losing. So this is why psychology beats the strategy. I hope I'm clear. A strategy only works if you follow it, and it's very hard to follow a strategy, all right? And in moments like this, emotions try to take control. Now, when I'm trading in this environment, I'm constantly checking myself. If you follow how I trade, how I live my life, it's directly correlated to my results, right? Ask myself, am I calm? Am I rushing? Am I trying to force a trade because something should happen and it doesn't happen? You know, if the answer is yes, step back, do something, go out, go for a run. There are lots of things you could do. Read a book, do some meditative activity and so forth. So avoid overtrading. It's very important but hard to do. Overtrading is one of the biggest account killers that I've seen. Okay, take your time. When the results are out, you see the numbers, dive in. You might get some nuggets in here. Understand how all this is correlated. Like I had one student blow up on the weekend with this gold trade. Like, how the hell would you, if you had stayed here for a while and understood the highs and the lows, and you put in a let's say you could just put in an ATR, all right? Yeah, I usually use the ATR for the pocket options, right? We have gold, we check out the indicators, we have the ATR, and you could see that, come on, like it's the daily, like all the way from, all the way from first, we never had such a big wag up. And if you look at the RSI as well, it's directly correlated. So these kind of moves need a lot of reason, right? You need to think logically. Getting in at the top does not make sense, even when the entire world is preaching gold is the next new BTC. Doesn't work like that. So I don't ask how many trades I can take, right? I ask how many bad trades can I avoid. It doesn't come from greed, guys. It comes from pressure, the feeling that you should be trading because something is happening. But remember, activity does not equal opportunity. The more you work doesn't have any impact on your results. So right now, if you look at X, former Twitter, you'll see extreme opinions, right? Everyone is trying to give an opinion, right? Just check it out. Check anyone, right? Go to home. Everyone has an opinion, right? Breaking, President Trump imposes a 50% tariff on any aircraft sold by Canada to the USD. You go quickly check out what's happening with the performance indicator, performance leaders, see what's happening with the correlation between Canadian dollar and let's see, where do we have it? Canadian dollar. Yeah, it is down. Where do we have it? Yeah, you could check out the Forex market heat map, Canadian dollar, and there you have it. All right, we have some greens there, strong. So that kind of analysis, understanding what's happening. So everyone can have an idea, everyone can have an opinion on X, but you know, you have to be convinced, right? If everyone is convinced of direction, when everyone agrees, the market is usually setting traps. This is experience. I speak from experience, and I'm telling you that whenever you see the majority going one way, you need to question yourself. So I don't ask questions like, why should I trade this and that? I need to look for confirmations, and confirmations don't just come from technicals. Understand that. Now, if I take one clean setup today, that's enough. If I take note, that's fine too. Waiting is a position. How does my decision framework look like when I'm trading? Okay, guys, don't forget I have very nice tools for you in my chart. You might want to check out the loss compensation system that I teach. An incredible way to develop the skill set of risk management, right? Sitting on your hands, understanding how much to use, when to use, so forth. Remember, we're using binary options, and this has a different, pretty much a different way of execution. Now, let me show you how I structure decisions across markets. Markets are different. You see me from time to time looking at stocks, indices, crypto, forex, but mainly my signals are in the measures. First, macro content. I like to look at the macro content. I check out inflation data just like I'm showing you right now, right? What's happening with the inflation? We already looked at that from the all right, Fed hints a little bit about that, but you can get that from the Bureau of Statistics, data tools. Go check out CPI inflation calculator. Understand. For example, you could, if you have friends in the US, if you have friends all over the world, ask them simple things like, how much is a liter of milk, right? You want to ask simple questions. Don't just believe whatever is out there. You want to see how inflation has changed between, say, the past 5 years. If we had $100 in January 2020, what would it look like in December? Yeah, that's pretty much now. That would be 25 extra dollars. Now that is crazy. Like if you look at 2024, we had a $5, and this has a varying correlation with the way the Fed increases or reduces the rates. Now, inflation is a big one. We've mentioned this a couple of times, and probably if you've been here around, you go through my videos, you'll understand how to dissect inflation, how to really absorb it and use it, or rather execute your trades. The sentiment, the positioning, for the macro context, I look at the court reports to see how large players are positioned. This doesn't give timing, it just gives context. We've looked at that. You could go to commitment of traders on bar chart, pick out your favorite currency. You could log in. I just don't want to log in here. Check out what's happening. For example, we have non-commercials, commercials, see how that is correlating with small speculators and so forth. For a more precise understanding, you might want to look at the detailed report. Okay, you could switch to your commercials. We want to, all right, log in. I want to log in today. All right, let's log in. Let's go. There you have it. So we want to concentrate on non-commercials, the large speculators. Look at what's happening. The Canadian US dollar. The numbers are right there. We had 59, that is minus 3,200 shorts, and overall we had asset managers 2,000, 5,000 versus dealers, leveraged long shorts. So understand that. You could map what really is happening with the non-commercials. Go back to the macros, jot that down, journaling is very important, and keep bouncing around your lovely your lovely instruments that you like. Don't forget, you can put that up here by tagging them for easy access. That way, if you need to switch between trades or screens, you can always use that. Now, for sentiment, Twitter shows me where retail emotion is. Okay? Twitter shows me where emotional is, especially with some accounts. Extreme sentiment warns me to be cautious, simply cautious. Oh, what's happening right now? So, with the macro context in my mind, at the back of my mind, only after that do I look at charts and pocket option for execution. This is my execution platform. With all the bias, I could look for gold, for example. We move to the lower time frames, check out what's really happening. Yeah, so gold. Okay, gold is bouncing back. Now, it's the end of the month. We surely might have a test to that low, right there, because we have probably a lot to feel. There was a lot of liquidation going on, so we could have, okay, let's see what's happening. Yeah, we could have all this field, right? This part here, we could have all that field, and it could come very first. But my assumption is, since we're seeing what's happening, we're not really sure. We might have a pullback. That way you want to put up a Fibonacci and look at how support is formed over here at the lows, right? At the lows. How is it price going to react here? Now, depending on that, we might bounce here. So it's very hard to enter right now, especially with commodities. I highly advise that you sit on your hands. The best way is to just play around with the scalping and some of the signals that I send. Like, we're having a pump. We understand what is the time. We are 6 minutes to the 2 o'clock hour in London. Now, you can see volatility coming in. You want to put your risk, you want to test the waters, say 2. All right, let's see. Check out 0.25%, which is about $125. You want to set your expiration time to, say, 15 seconds in this case, right? So I'm probably going for a position here. Reason being is I follow some of the indicators on my screen here. All right, guys. So just giving you an idea, I don't force trades too much this, right? I let price confirm or invalidate ideas. Remember, Forex moves slower, indices move sharper, and crypto exaggerates everything. You can see for yourself what happened to Bitcoin. We're at 82. We could go low. So same process, just different speed. It doesn't matter what you're trading. Doesn't matter what you're trading. We had a, Bitcoin is at $1.65 trillion market cap now. You could see how everything here seems to be in the red. Okay, now gold, we'll move gold here. It's on my target list today. USD card. Now, if go to my Telegram, just check out our win rate, guys. Everybody's happy. Everyone in my communities is doing exceptionally well. We have results every day. You could go see how we're winning. We had a 100% win rate this morning. We had the Euro GBP, we had Australian dollars CHF, and Australian dollar CAD. Okay, guys, back to our theme. Now, once we understand all that, we move to the live execution. So before clicking anything, I explain why I'm interested or why I'm waiting. I explain that invalidates what actually invalidates the idea. If nothing is clear, I don't trade. For example, we've had gold. We understand that gold is pulling back, but it's bullish over a long time. If you're looking at the weekly, we still have the trend. Okay, we have that trend, we have that push. Now, we definitely will have a pullback. It was imminent, like we expected that. How deep will it go? We have no idea, but basing on the RSI, we are extremely low in that time frame. Now, the only reason why I don't want to go in right now, longer term, is because we are approaching the end of the month. So once I'm done through the explanations mentally, it's very important for newer traders to hear, right? If you're new here, please listen. No trade is a valid decision. The fact that you enter right now and make some money, this is not a valid decision. You're only reinforcing your negative habits, and this is very bad at the start, right? If you're just joining in, guys, I'm going to drop my pocket option promo code for those of you who ask. Remember, platforms don't make traders, discipline does. Hello, bro. When you send a signal in the pro group, example, buy 3-minute ETC, why you did not mention price to like put 100 hour 500? Okay, we have Jamshid Ahmed K7Z. I'm not really understanding what your question is, because you mentioned why I do not put 100 hour 500. Like, is that dollars? Are you talking about levels? Could you kindly explain yourself? Thank you for the question. Trying to understand like what exactly you meant by 500 or 500. I think I need to have a separate video on actually executing, because this is very important. Many questions are coming in about execution. When I set the instructions, you have a time frame. You simply need to, like we have the break now, guys. We have the break on gold. We have the break on gold. 5,000. We are at 5,003. Guys, here's a nice one. You could actually arbitrage this. We have 5,300. This because of spreads, markups, and so forth. Here we have 5,000. So if you go short here, you're probably going to do well. Anyways, guys, we've had quite an interesting stream today. I've dispersed a lot of gems here and there. I think I'm planting seeds in your minds, and you can kind of understand how traders think. Now, these are retail. As you move forward, as you learn, as you grow, you will need to understand the back-end dynamics, how the institutional traders think, how the algos work, how the banks put pressure from the higher hierarchies of the institutional chain, and how that trickles down, and understand that you are at the, like literally at the bottom of this hierarchy. It's extremely hard to make money. Now, make it worse if you involve your emotions, you have no guidance, no quality environment of people who really know how to dissect all this and understand and deliver this. So you're working against artificial intelligence now that has made things actually worse. You know, back in the days of my HF high frequency trading, you could see what's happening there, the lag, the latency, the broker, the games, the risk, you know, all the dynamics, the mechanics that actually affect your trading. Before you press buy, you're against so many things. So as we move forward, you realize that before, scalping was really cool. Like, you'd stay in a trade for a week, for a couple of days, and make like a bag of money. And now, to get the same percentage, it takes longer. You need to. So anyways, guys, manual trading remains the best. Manual entries, manual exits, but very focused on discipline and process. Dollars. All right, you came back with dollars. Very good. Now, guys, very good question. You mentioned price to like put 100 or 500. Now, understand this. I do not control your wallets, right? I don't control your appetite and how much money you'd like to make. If you've noticed, I always use the calculator here. On the pocket option dashboard, to the right, you have the time, you have the trade, and I always advise maximum 1%. If you convert that to dollars, here it's 500 for today's wallet, all right? However, if you would like to test out the market, I highly suggest you break the 1% in a couple of trades, all right? There's a whole entire strategy to my signals. Like, if I put out a signal, you might want to test it with, say, 0.25%. You break it down into 4, right? And that is 125. Test it out. See how it goes. From 4 trades if you're using the martingale strategy. Martingale. All right, you have a deposit, say, of $500, right? This calculates 5 steps, meaning you have five trades. As you could, this is one option, right? Your stake and your accumulated loss. So if you don't really understand this, please ask questions, like we will help you. So about dollars, Mr. James, this is on you. Like, I don't control your wallet. You need to understand your risk management. I highly advise not more than 1%. And this 1%, as you gain momentum, as you go, you could actually increase or reduce, right? Need to test the waters and understand the sentiment at the moment. Like right now, I already understand gold will pretty much move. So this move right here correlates with the time. It's 9 o'clock, best time to get in. We have correlations. You could check out the performance indicators. Let's see what's happening. Let's see what is happening here. What is happening? Futures, commodity prices. We have metals. Okay, we have futures. You could look for interest as well. Let's see, performance leaders. Performance leaders. Gold. Gold futures seems to be minus 6% for April. There's a nice correlation indicator that one of my friends was working on that could actually, I'll try to get this in the next stream. Okay, we have some support there. All right, 1.25%, 15 seconds. I'm not really confident with this. This is not good for short term. I hate to fail. Like no trader likes to fail, right? Failing, if you look at my record, my profitability, it's very good because I take my time. My entries are very solid. So without wasting time, guys, I want to close with this. We had a heavy fundamental this week. Fundamentals were heavy this week. The market is processing them. We have Thursday, Friday, today inclusive, right? Direction will come, but it doesn't need to be rushed. Do not rush your positions. The Fed moves markets. Geopolitics adds pressure and volatility creates opportunity. We're waiting for this opportunity. Another nice one is the VIX that I like to check. My VIX, check the daily. Yep. So volatility hasn't really kicked in. Like, you know, I have my indicators here, 15, 30, above 30 would be an amazing trade. Okay, what is happening here? Recapture. Yeah, I opened the VIX over here, the volatility index. So the Fed moves the markets, guys. So we need to stay on the sidelines. Only enter if you're doing, you know, some of my signals. 3-minute marks, 5-minute, you know, 3 seconds, things like that. 5 seconds, 15. In my Telegram, I clearly set the instructions for you. Your mindset decides whether you grow or you give it back. Trade less, think deeper, stay disciplined after wins and losses. I'll see you guys in the next session. It was fun having you all here. Stay safe, manage your risk. Go into the Telegram. I'm about to send some signals. Cheers.
If you're
Rise up this morning, smile with the rising sun. Three little birds from my doorstep come, singing sweet melodies, pure and true, saying, this is my message to you. Oh, don't worry about a thing, 'cause every little thing gonna be alright.
Golden breeze touch my face at dawn. Hear the rhythm of peace carry on. Them little birds singing love so strong, saying hold on baby, won't